All right, listeners, ready to dive deep? Today, it's Conduent's Q3 2024 earnings call. You know this company, right? They're behind the scenes making sure all those digital platforms for businesses and governments actually, work.
Yeah.
And get this, their stock up over 11% after this call. So we got to figure out what's going on.
Yeah, big move for sure. Looks like the market saw something they liked.
Exactly. So let's break it down. First off, adjusted revenue hit $781 million. That is a 6% dip compared to last year, but hey, still on target with what analysts expected. Adjusted EBITDA came in at $32 million with a margin of 4.1%, again, right in line with expectations. But here's the thing, these numbers account for all those divestitures Conduent's been making.
Right, and those divestitures, they're like a total game changer for their strategy.
So they're basically Marie Kondoing their business portfolio.
Exactly, getting rid of anything that doesn't spark joy or, strategic value.
Love it. And they're not playing around either. They finished the first phase of this divestiture program and brought in a cool $780 million. That's right at the top of their target range.
Yep. And even more impressive, they're putting that cash to work already. Use 75% of $1 billion to pay down debt and buy back shares.
Talk about a power move, showing investors they're serious about financial stability and shareholder value.
For sure. That's a strong signal.
But wait, there's more. They hinted at even more divestitures on the horizon.
It's like decluttering on a massive scale, streamlining everything, getting laser focused on what they do best.
Makes sense. Efficiency is key.
Yeah.
But let's talk about sales. New business signings reached $111 million. A little mixed bag though, right? Strong commercial performance, but some weakness in the government sector.
Yeah, government contracts. They can be a bit unpredictable sometimes. Those deals take time. It's hard to judge from just one quarter.
Fair point. Got to look at the big picture.
Yeah.
So what's the big picture saying?
Well, Conduent says they're still on track to hit their sales targets for the year. So bumps in the road for sure, but they seem pretty confident.
Okay, that's reassuring. But now the million-dollar question. Where's the growth coming from? Conduent mentioned some key areas.
Absolutely. In their commercial segment, they admitted, yeah, we lost some business, but things are picking up. Expecting growth to ramp up in the second half of 2025.
Got it. So a little patience needed there. What about government? Any good news there?
Actually, revenue was down in that sector. 3 main reasons they outlined in the call transcript. We can dig into those later. And transportation, they had a big contract adjustment impacting revenue. But see, they're seeing some seriously strong implementation momentum in Australia, specifically a huge public transit system.
So short-term hit for a potential long-term win.
Yeah, you could say that. And remember, this Conduent has a huge base of recurring revenue. Almost 90%.
So they've got a solid safety net, even while they're making all these changes.
Exactly, provides some stability, which is always good in these uncertain times.
But I got to ask about this divestiture strategy. Is it really going to pay off for shareholders like they're saying?
That's the big question, right? And that's exactly why we're here, doing this deep dive to figure out if their plan holds water. It's pretty interesting, actually. Conduent isn't just getting smaller, they're really shifting your focus. It's like they're hitting the gym, getting lean and building muscle in the areas that really matter. These divestitures, they're freeing up resources so they can put more into things like automation and AI.
Smart move. Those are hot areas right now, especially in business process solutions.
Exactly. They're not just cutting costs, they're investing in the future.
Makes sense. But let's get back to those growth drivers.
Yeah.
You mentioned some headwinds in the government segment. What's holding them back there?
So according to the call, they had 3 main challenges this quarter. First up, some delays in contract awards. Happens all the time with big government projects, but it definitely impacts revenue in the short term.
Right, makes sense.
What else?
Second, some volume reductions on existing contracts. Could be a bunch of reasons for that. Government spending priorities change, or maybe the scope of services needed shifted.
Okay, so some external factors at play. And lastly, there was a contract termination. Ouch. Yeah, that one hits the bottom line directly.
Tough break. So a trifecta of challenges in the government sector. But what about transportation? You mentioned that big contract adjustment.
Right. That definitely put a dent in their revenue this quarter. But here's the good news. Remember that strong implementation momentum in Australia I mentioned? That public transit system. Big revenue potential there. Could be a major growth driver down the road.
So classic case of short-term pain for potential long-term gain. But let's bring it back to our listeners. We've gone over the financials, the divestitures, the growth drivers. But what does this all mean for the everyday investor?
Yeah, that's the key question, isn't it? Conduent is going through some major changes, streamlining, strengthening their financials, investing in key areas. But will it all be enough to create real lasting value?
Right. Some investors see this as a turnaround story. Others are more skeptical. The stock jumped after the call, so some people are definitely buying in. But the real test is, can they deliver on their promises?
Totally. It's too early to celebrate, but there are definitely some positive signs. Their management team has a clear vision and they're taking action.
Okay, so some cautious optimism. Now, before we get too carried away, we have to remind everyone, this is not financial advice.
Of course, this is just a deep dive to help you understand Conduent and their potential, but the decision to invest or not is always up to you.
Right. Always do your own research, but it's always fun to play around with ideas.
Yeah.
Right. So let's put on our what-if hats for a second. Based on this earnings call, what's a crazy but plausible trade idea we could cook up?
All right, let's get creative. The market reacted well to their divestitures, and there's some hints of a turnaround. So maybe a momentum trade could be interesting.
Hmm.
Imagine buying a call option strike price a little above the current share price.
Okay, so you're betting the stock keeps climbing in the short term, riding the wave from this earnings call.
Exactly. Risky for sure. But if Conduent keeps beating expectations, it could pay off big time.
High risk, high reward. I like it. But what about a longer-term play? Something for those who believe in Conduent's story, but aren't looking for a quick buck.
If you're in it for the long haul, consider just buying shares outright. If Conduent pulls this off, achieves sustainable growth, the stock could be seriously undervalued right now. But this play takes patience. It might take a while for the market to catch up.
Classic value investing, looking for those hidden gems.
Exactly. Of course, there are risks with any investment. The competition in their space is fierce, and Conduent still has work to do to get everything running smoothly.
So a potential roller coaster ride for investors, but with the chance for some big wins. But again, just to be crystal clear, this is all hypothetical, just exploring ideas, not giving financial wisdom here.
Exactly. For entertainment and educational purposes only.
All right, we've covered the financials, the strategy, the growth drivers, even threw in some fun trade ideas.
Okay.
But before we wrap up, I have one final thought. Something to ponder.
I'm all ears.
What if, as Conduent keeps getting leaner, more profitable, more focused, they become a prime target for acquisition?
Interesting. Yeah, that makes sense. They're really making themselves attractive to a bigger fish, looking to expand in the business process solutions market.
Totally.
Yeah.
It's like they're setting themselves up to be the belle of the ball.
Right. And with all these divestitures, it almost feels like they're getting ready for a sale.
Maybe they are.
Mhm.
Maybe they aren't. We'll have to see how things play out.
Yeah,
Definitely adds another layer to this whole story.
it does. It reminds us that even when we think we've got it all figured out, there's always more to the story, always more to uncover.
That's what keeps things interesting. Always looking for those clues, those hidden gems that can give investors an edge.
Oh, speaking of clues, did you catch how much they talked about their partnerships?
Yeah, they mentioned working with some big tech companies.
Exactly. Could be a sign they want to be part of a bigger ecosystem, which would make them even more appealing to a potential buyer, especially one looking for a tech boost.
It's like they're weaving a web, building connections that could lead to bigger and better things, whether that's as an independent player or part of a larger company. Who knows?
That's the fun part of investing. It's all about anticipation, weighing the risks and rewards, deciphering the clues, and making your bets.
Totally. We can analyze the data and speculate all day long, but ultimately the market decides.
True enough. So we've covered a lot of ground today. Conduent's financials, their strategy, those wild trade ideas. But as always, this is not financial advice.
Definitely not. Just trying to give you the info you need to make your own smart decisions. Do your research, think about your risk tolerance, talk to a financial advisor if you need to.
All great advice. And if you enjoyed this deep dive into Conduent, be sure to check out our other episodes and resources. We're here to help you make sense of it all.
That's right. Until next time, happy investing, everyone.